Hello and welcome back to Aussies Money Matters. In this video, we'll be talking about a topic that affects most of us: credit scores. Credit scores are important for many reasons, such as getting approved for a loan, renting an apartment, and even getting a job. In Australia, credit scores are measured by credit reporting agencies like Equifax, Experian, and Allian. So, let's dive into understanding credit scores and how to improve them in Australia. Now, what is a credit score? First, let's start by defining what a credit score is. A credit score is a number that represents your creditworthiness based on your credit history. In Australia, credit scores range from 0 to 1,200, and the higher your score, the better your creditworthiness is perceived. Lenders use your credit score to assess the risk of lending to you. Your credit score is determined by factors such as payment history, credit utilization, credit age, credit mix, and recent credit inquiries. Now, how to check your credit score. It's important to regularly check your credit score to ensure accuracy and to identify any areas for improvement. You can check your credit score for free once a year from each credit reporting agency in Australia. You can also sign up for a credit monitoring service that provides regular updates on your credit score. Next big thing is how to improve your credit score. Now that we know what a credit score is and how to check it, let's move on to how to improve it. Here are some tips to improve your credit score. Pay your bills on time. Payment history is one of the most important factors that determine your credit score. Late payments can negatively impact your score. Keep your credit utilization low. Credit utilization is the percentage of your available credit that you are using. Aim to keep your credit utilization below 30%. Don't apply for too much credit. Applying for too much credit in a short period can negatively affect your score. Keep old credit accounts open. The length of your credit history is also an important factor in determining your credit score. Keeping old credit accounts open can help boost your score. Diversify your credit. Having a mix of different types of credit, such as a credit card, a personal loan, and a mortgage, can also help boost your score. 10 important things that are often ignored by Australian people about credit scores. First, credit scores are used by lenders to assess your creditworthiness. A credit score is a numerical representation of your creditworthiness based on your credit history. Lenders use this score to determine if you're a good candidate for a loan, credit card, or other forms of credit. Your credit score affects your ability to get credit. A low credit score can make it difficult for you to get approved for credit, while a high score can help you secure better terms and interest rates. Your credit score is based on your credit history. The credit score is calculated based on your credit history, which includes things like your payment history, credit utilization, length of credit history, and types of credit accounts. Your credit score is not the only factor that lenders consider. While your credit score is an important factor in determining your creditworthiness, lenders also look at other factors such as your income, employment history, and debt-to-income ratio. Checking your own credit score does not hurt it. Checking your own credit score is considered a soft inquiry and does not affect your score. However, too many hard inquiries, when lenders check your credit score, can negatively impact your score. Late payments can hurt your credit score. Often late payments can have a significant negative impact on your credit score. It's important to make all payments on time to maintain a good score. Your credit score can improve over time. If you have a low credit score, it's not necessarily permanent. With time, responsible credit use, and timely payments, you can improve your score. Closing credit accounts can hurt your credit score. Closing credit accounts can actually lower your credit score, as it can decrease the length of your credit history and increase your credit utilization ratio. Credit repair companies may not be able to help. Some credit repair companies promise to fix your credit score, but many of these claims are unfounded. In many cases, the only way to improve your score is to responsibly use credit over time.
Your credit score is not the only factor in financial health. While a good credit score is important, it's not the only indicator of financial health. It's important to also focus on things like saving, budgeting, and building a solid emergency fund. Now our part 4 is how long does it take to improve your credit score? Improving your credit score is not an overnight process. It takes time and effort to see results. Depending on your situation, it may take several months to a year or more to see a significant improvement in your credit score. Now let's talk about some top Australian companies in creditworthiness. Commonwealth Bank of Australia. The Commonwealth Bank is Australia's largest bank by market capitalisation and is one of the Big Four banks. It has a strong credit rating, with Moody's rating the bank AA3 and Standard & Poor's rating it AA-. BHP Group Limited. BHP is one of the largest mining companies in the world and is headquartered in Australia. It has a strong credit rating, with Moody's rating the company A1 and Standard & Poor's rating it A+. Westpac Banking Corporation. Westpac is one of the Big Four banks in Australia and has a strong credit rating, with Moody's rating the bank A1 and Standard & Poor's rating it AA-. Rio Tinto Limited. Rio Tinto is a multinational mining company and is headquartered in Australia. It has a strong credit rating, with Moody's rating the company A3 and Standard & Poor's rating it A. ANZ Banking Group Limited. ANZ is one of the Big Four banks in Australia and has a strong credit rating, with Moody's rating the bank A1 and Standard & Poor's rating it AA-. Woolworths Group Limited. Woolworths is one of the largest supermarket chains in Australia and has a strong credit rating, with Moody's rating the company A2 and Standard & Poor's rating it A-. National Australia Bank Limited. National Australia Bank is one of the Big Four banks in Australia and has a strong credit rating, with Moody's rating the bank A1 and Standard & Poor's rating it AA-. Telstra Corporation Limited. Telstra is Australia's largest telecommunications company and has a strong credit rating, with Moody's rating the company A3 and Standard & Poor's rating it BBB+. CSL Limited. CSL is a global biotechnology company and is headquartered in Australia. It has a strong credit rating, with Moody's rating the company A2 and Standard & Poor's rating it A. Macquarie Group Limited. Macquarie Group is a global financial services provider and is headquartered in Australia. It has a strong credit rating, with Moody's rating the company A2 and Standard & Poor's rating it A-. Now let's discuss 10 things that help to avoid a bad credit scores in Australia. Maintaining a good credit score is essential in Australia if you want to access credit facilities like loans, credit cards, and mortgages. Here are 10 things that can help you avoid a bad credit score in Australia. First, pay your bills on time. Late or missed payments can negatively impact your credit score. Make sure you pay all your bills, including credit card payments, loans, and utilities, on time. Second, check your credit report regularly. Review your credit report at least once a year to ensure that all the information is accurate and up to date. Dispute any errors or inconsistencies immediately. Limit your credit applications. Applying for multiple credit facilities in a short period can affect your credit score. Only apply for credit when you need it. Keep your credit card balances low. High credit card balances can indicate that you are struggling financially, which can negatively affect your credit score. Try to keep your credit card balances below 30% of your credit limit. Maintain a stable employment history. A stable employment history indicates that you have a regular income, which can positively affect your credit score. Avoid defaults and bankruptcies. A default or bankruptcy can stay on your credit report for up to 5 years and can significantly impact your credit score. Keep old credit accounts open. The length of your credit history is a factor in calculating your credit score. Keeping old credit accounts open can improve your credit score. Avoid fraudulent activity. Fraudulent activity on your credit report can negatively affect your credit score. Keep your personal information secure and report any suspicious activity immediately. Avoid too many credit inquiries. Multiple credit inquiries can negatively impact your credit score. Only apply for credit when you need it. Seek professional financial advice. If you are struggling financially, seek professional financial advice. A financial advisor can help you develop a budget and payment plan to help you improve your credit score. Finally, let's move to our conclusion. Understanding your credit score is essential to managing your financial life. By checking your score regularly and following the tips we discussed, you can improve your credit score over time. Remember, a good credit score opens up more opportunities for you in the future. Thank you for watching this video. If you found it helpful, don't forget to like and subscribe to Aussies Money Matters for more financial tips and advice.